All right, everybody. Thank you guys for tuning back in. We are back again on the series. We just had our first episode out. This is our second one. We have our special guest, Raymond LI, from his new company, Veriswap. Raymond, I appreciate you for taking the time to come out here and kind of discuss some interesting topics. And also give a little more information about yourself. Um, so yeah, I really appreciate it. I know you have a lot of important and interesting things to add to our conversation.
Absolutely. Thanks for having me on today, Josiah.
Awesome, awesome stuff. So I guess the first thing I don't think we've met personally. I know you're friends with Brian. I know Brian as well, Sunday League investor. So we kind of have that mutual tie. Um, but I guess what is your necessarily your background in the hobby and slash like professionally, whatever the case may be. Like how did you essentially like get here?
Yeah, it's a good question. I feel like my pathway to the hobby has been pretty similar to other people's. So basically, when I was a kid, I grew up in China, and China Pokemon was like really big when I was like 6 or 7. So I grew up playing all the Pokemon games, collected Pokemon cards, traded them. So I was really involved in Pokemon when I was a little kid, and then kind of just forgot about cards for the next 15 years of my life. And then back in 2018, I worked a finance job, which I absolutely hated. I was working investment banking. I was working for 15 hours a day from like 8 a.m. to 12 a.m. every single day. Absolutely hated it. So within 8 months, I had quit my job with like nothing lined up, and I was just sitting at home one day eating lunch, looking for jobs, right? And I see this Gary V post on LinkedIn talking about how the Figure 86 Jordan is like a really good investment. By the way, during that time, that card was 30K in a PSA 10,
What
right? So,
time period was this in, by the way?
sorry, what?
What time period was this in, by the way? Like
Around
year?
2018.
Oh, gotcha, gotcha.
Around 2018, yeah. Um, so slowly, I thought that was really interesting. Started flipping cards to pay rent. So I didn't have a job back then, and then little by little, I went to the national in July, and back then the national was way smaller, a little bit smaller than what it was in 2021, 2022. But had an awesome time. Like I met a lot of people that I talked with online before, and it was just being able to like, kind of like see that Facebook community in person. I think was really really cool. And from then, I just dove deeper and deeper, and 4 years later, here I am today.
Interesting. That's a really interesting. Um, yeah, I find that switch is like kind of insane. Like, I mean, taking the leap, that's kind of dope. No, nothing lined up, just YOLO'd it and sent it straight into cards. That's definitely an experience, I'm sure, to say the least.
Yeah, it
um,
definitely wasn't part of the plan, but like hindsight, it seems like all the puzzle pieces they fit together.
100%, 100%. So in this series, I think the main topic we're gonna really want to touch on today is kind of the more so financialization and commoditization around like cards and the hobby itself, whether that's a good thing, whether that's a bad thing, the pros, the cons, pretty much that whole sphere. Um, so I mean, I guess overall point, what do you right when you hear that kind of topic come up, what is that what sort of alarm bells or like thoughts go into your head? Not alarm bells necessarily, but what does that make you exactly like go to?
Yeah, Josiah, that's a good question. I feel like anything that expands the total market of the hobby is a good thing. It's kind of like that quote. It's like, if the tide, something like if the tide rises, then all the boats go up, right? I think that's definitely true when cards are commoditized and that people start turning cards into financial instruments. And that's in theory, right? If someone who previously was not exposed to cards, not exposed to collectibles and memorabilia, starts investing in like fractionalization, fractionalized shares, fractionalized cards. Um, that can only help us in terms of like exposure. I think exposure is good for everyone.
Interesting. So yeah, I mean, I'd say definitely like a positive thing, and I would probably agree with you as well in the terms of just growing the hobby. Yeah, for the sake of like the conversation, I'll let you guys know on YouTube that I'll play a little devil's advocate just to kind of keep a little discussion and dialogue discourse on some of the topics. So I mean, whatever the case may be, don't hate me too much, but but that's kind of what
I'm
we'll
ready.
go. All right, so let me throw this at you because I know I brought this up in my last interview with Long On Cards. So obviously, I think one of the main reasons we like whether it be a program such as like cash advances on cards or being able to take loans out on cards, to be able to provide more liquidity. But do you feel as if we have in this past year or two have taken advantage of that too much to the fact that if we don't have that, like the prices of where the market is unsustainable. What I mean by that, I'll give you an example. At one point, alt was I forget exactly what it was, but you had to have a certain amount of cash in your account to buy the assets, and therefore a lot of the complaint was the assets were not selling, up to full market value. Another thing would be like, I guess for me personally, you could tell me if it's a little different. Um, Being able to do deals in full cash on Instagram or whatever the case may be is far and slim to none. I feel like another reason why auction houses are so heavily accepted and used are because they allow payments, whether that be through credit card or whether that be like a grace period to pay. You don't, you could swap in and out cards, something along those. It's some sort of credit uh to purchase these items. Do you feel as if we are abusing that system almost? Loaded
That's an
question,
interesting
I
point.
know.
Yeah. I think in my opinion, people are not using it enough. From my friends and like people that I know in the hobby, they never ask for cash advances on auction cards. I personally do. But every time I mention it to my friends, they're always like, "What's this?" Or like, "I didn't know you could do that." Um, which I think is like is really interesting. I think it's actually underutilized. Um, I will say though that like my experience with cash advances so far has been horrible. I think that a lot of these, not gonna mention
No
any
names,
names,
but yeah.
but I think generally there haven't been like proper accounting systems set up to account for cash advances. And generally, when I receive a cash advance, I'll have to track the accounting on my side, and like I would say 8 times out of 10, when I get the cash advance notice back from the auction house, the number is incorrect, right? And I think that's part of what deters people from actually like doing these cash advances, because the accounting is really messy. And you think about it like from the time in which you get a cash advance to the time you get paid out for the full amount of the auction, that's typically around a month and a half, right? So to kind of keep that in your back pocket for a month and a half is like that takes mental space, right? So I think people are just too lazy. They just kind of just prefer all the lump payment all at once, and go from there. I think there are also I think the whole idea of like um, of not requiring of collateral to buy items. All is now doing that. I think that's certainly a good thing, right? Because it keeps auction prices high. Initially, you had to have the cash on hand before you could actually buy anything. And, that process would tie up your funds for like, I think it was like 3 to 5 days, right? Buy something on the all platform. I transfer funds, buy something. If I didn't win the auction, I have to transfer it back, right? And then that gets caused a lot of like accounting issues as well, some like delays. Um, but yeah, in short, I think that people aren't really utilizing cash advances to the extent they should.
Interesting. Okay, so kind of honest, almost like the complete reverse. So essentially, the system is not really built out fully, in your opinion, to really be able to be fully utilizable for like majority of people.
Yeah, so that's one point, Josiah. I would say another point is that I think generally the hobby does not value time that much, but they value prices. So what I mean by that is like you see people who will spend months trying to sell a card for a few $1,000s over comps, when they could have like offloaded in a matter of like days, if they had like priced fair. And I think so. I think generally people value like dollar money over time. Um, so in which case, like the cash advance feature would actually not be that appealing to them, right? Because cash advance is kind of the reverse. Like you kind of value your time, very heavily, which is why you'd want to cash out quickly on cards.
Interesting. That's actually a really good point that you see often. I mean, whether that be like the dealers that kind of are like 20% over sticker or this and that, or someone just, not really being able to work with like recent comps. I do actually agree with that 100%, which is definitely I would say a flaw in a lot of people's thinking. Obviously assuming that they're not just like, just want the card, but majority, yeah, I would definitely agree with that for sure. So let me turn back to, how about something like, so for instance, I've heard PWCC. I know they offer collateral backed loans against specific assets. Um, and for instance, I've heard multiple stories. One's like I've heard that there's certain individuals that have had specific loans out for multiple years at a time. I guess to do whatever the case may be with it, acquire new assets. I don't know, do so. Who knows? A real estate deal. I don't exactly know what they're
Yeah.
doing with the money, but it's out there. Um, Again, I think there's definitely risks, and obviously, you know, you have cash on hand, so you have the liquidity, so there's pros with having that. Do you have I mean, what's your opinion on that, for instance?
That's my opinion on loans, like these multi companies giving out loans.
Yeah, because I think there's definitely two ways you could skin the cat with that in terms of like a positive and a negative ramification, especially in a down
Yeah,
market, I would say.
especially in a down market. Generally, personally, I don't think I would ever take a loan out on my cards. And the reasons for that is the interest rate is actually pretty high. Um, I think I've never looked at the terms specifically, but I think it's like on a per month basis,
It's like
and
one,
it works out to maybe like I think it like 7 to 10% a year. I could be completely wrong, but I think generally you'll probably get better rates elsewhere. I mean that's how these companies make their money, right? They make the spread based on like the amount they borrow and the amount they're able to loan out to people. Um, yeah, so generally, not a huge fan. I think maybe in like a rising market that does make sense, but it kind of creates like a bubble that's like not sustainable, right? Like I could say I owned a Fleer Jordan PSA 10. Say that card is around 200K. I get a $100,000 loan. I can use that to buy, more of a collection, right? And I vault that with that company, and I create another loan on it, right? And then you create another loan. It just keeps on cycling through and through. Um, but like everything's good in like an up market. You're kind of like leveraged, but what happens when it goes down, right? I
that's
don't think it's good for me as an investor. It's also not good for the companies, right? Because then they're stuck with like a bunch of assets that are just falling in price and they can't really liquidate without getting themselves burned, right? I will say though, like I think just like taking a step back, like the reason for like these loans, the reason why these companies are incentivized to do loans is because it really helps with their metrics, right? Like if you think about like Alt as a company, they're raising money. They want to look good to investors. So like, and part of the way they do that is to say like, okay, we have like X number of dollars of assets under management, right? We have this amount of cards in our vault, this amount of money loaned out. So it's really like it's kind of like an optics play as well. You can convey to investors that you have X amount of like influence over the market.
Yeah, for sure. So obviously you said not that many people that use the cash advance or use it properly. What would you say in terms of people that take loans out against their cards? Would you say that's a higher percentage, lower percentage, or that at least?
Then cash advances,
Take collateral loans out.
compared to cash advances, right? I would say it's definitely lower. Um, like I know, I guess maybe it's something that's like not talked about that much since like kind of like private information with people don't really share that.
Yeah.
But if I were to kind of guess the percentage of people that take loans out on their cards, I would say, at least in my circle, it's probably like 10% or lower. Out of my close friends, like I don't know a single person that takes loans out on their cards. Maybe they're like different collector groups, but I feel like in my experience, I haven't really seen too much of that. What about you, Josiah? Has that been kind of the case for you?
My personal, well, for one, I think it's definitely, if it is prominent, it has to obviously be prominent amongst the more high end dealers. For instance, I've heard stories about obviously people doing. I heard one story. Someone took a cash advance or took a loan out against their card for like 30K, whatever the case is, remodeled their kitchen. I heard that story. I've heard,
Hmm.
the story, people have had these, loans out for multiple years, which they do. They're, especially in the up markets, fantastic. They're making a ton of money. But,
Yeah.
there's obviously the risk with that, assuming your assets drop a considerable amount of money, which, I guess is kind of what you're thinking. But I think I would agree with you in the fact that it definitely is not very, people are not out here just like saying this and that. Cause like one, even from like a flex perspective, no one wants to admit that if they did take a loan
Yeah.
out, they're like, yeah,
Yeah.
I have all this money, but this is, yeah, I borrowed against my card that's in my vault or whatever. So yeah, you're right. I really don't think we're gonna know unless we really see the back end data. But I don't think it'd be that crazy. But again, the people that are taking those out, I probably don't interact with as much as you do.
Yeah. Yeah. I feel like, yeah, even on my end, like I don't see too much of it. I will say though that like maybe we both have like have a more of a biased perspective, because maybe like the rest of the hobby is like more risk taking. So like you look at like people who like join breaks, right? Like there are people who go into debt by joining breaks. Uh, I heard a story from a friend during the pandemic that like every Wednesday, when the government subsidy checks would clear, people would start paying for their breaks, because they would have the money to pay for the spots, right? So I think maybe there are people who like are more risk tolerant and they live paycheck to paycheck. But at least like in my experience, I haven't really seen too much of the lending happening.
Yeah, that's crazy. Because yeah, so I mean, I kind of all, I mean, assuming that there's not much of that actually happening, which I mean, we know there is to some extent, but I guess that kind of really puts the question like how big of a potential risk that could be, assuming that we had more economic turmoil and then, you know, certain cards drop. Again, I don't really know the vetting process, but assuming cards drop in prices, and people are unable to pay the loans back, that's almost like a tsunami tornado, like, a really bad situation to happen because in order to pay off those loans, you have to just sell the cards, which results to more bad comps. But again,
Exactly. Yeah, it's kind of like a cycle, right? Like if the borrower defaults, like you'll have to auction off the card. Not to mention, if you auction off the card, eBay fees are around like 10-12%, right? You lose a bunch of money from that as well. Um, Unless these like auction teams have like certain ways to get rid of the card. Um, I think that could cause some problems. But in up market, obviously, like everything will be good, right? Both parties gain from that.
for sure. Would you think? I mean, yeah, I don't know. I guess we don't really know, but I'd ask like, I don't know. Do you see that as like a potential thing from what you've seen as like a potential outcome?
Potential problem?
Yeah.
Oh, 100%. I think in my opinion, like no one should ever take a. This is just personal experience. Like my personal opinion, I don't think anyone should ever take a loan out on a card. I think if you need the money, you should just sell the card. Card prices are like way too volatile, and you can always buy that card back, right? If you really really wanted it, you can always buy it back. Um, but I think like the interest rates generally tend to be pretty high, and like I guess for me, like I'm pretty like financially conservative, so I try to not take on too much debt, personally.
Gotcha. Yeah, I 100%. I'm on the same boat as you are with that. And then another aspect of well, I guess we'll move on. Another aspect on the financialization, our stuff along the lines of like fractional. I guess we'll touch on that for the start. Is just like the fractional aspect. I've definitely seen probably more cons than pros recently with that. I think the concept of fractional is pretty cool. Uh, but there's definitely been some downside in the sense that there's very little liquidity. Certain items can't get filled in general, and there's definitely been certain cases where I don't want to say the exact name because I'm not sure, but like I know there's an instance where a one-of-one Mahomes was bought high. Some people would argue it wasn't able to be fully. It was like put on a fractional site for like double the amount of price, double the price that someone bought it for. It wasn't fully filled, so people are claiming it's just a way for the whales to get out of their bad purchases. So that's definitely some of the criticisms. Would like to hear your opinion. I guess there's also pros which I didn't mention, but I would like to hear your opinion on fractional as well.
Yeah, no, that's a good point. I think if done properly, it's great for the hobby. It's great for the hobby because it gets people who are not typically into sports cards into the hobby. It also gets people who would typically not be able to afford these super high-end cards a piece of that card, right? I think, but the big caveat is that if it's done properly, I think like this space is like still relatively new in terms of like uh, card in terms of like card years. Um, so I think that eventually, like these current companies are getting there. I think they're on the path to get there. But are we there yet? I don't think so. I think in a few years, like especially with like Fanatics taking over, especially with the market size, I think like increasing due to like Fanatics' reach. I do see like fractionalization becoming like very big part of the hobby or expanding the hobby, even though it's not there yet. I think the criticisms that you mentioned earlier are like very, very valid, especially the one about like flipping cards that for way above market value. Um, I think what I noticed afterwards though was like these companies have been a lot more careful with making sure like this doesn't happen again, right? Like that happened, I think it was maybe like 5 or 6 months ago, and we haven't really seen incidents of that since. Um, so I think yeah, like public perception is really, really important. One thing that worries me though is regulation. I was talking with my friend who's a securities lawyer. He also does cards. Um, and he was worried about kind of like the regulation aspect of like, okay, like, are these cards stocks? Are they companies? Right. And if they are, they have to be regulated exactly the same way that companies are, right? So I think as like with any industry, as it gets more and more mature, these gray areas turn into either red or green areas, right? Um, and there might be like some legal problems down the road as well.
That's very very interesting and very I guess good to know really because I guess to go along with the point about like picking cards. I was talking to Eric Whiteback on my IG live stream like the other week, and he said how he envisions something like a fractional to work would be very similar to like how the art market works, whereas like the reason a lot of like the funds and all that works is because they believe in the picker, and the picker is able to really choose the correct asset, the selection of assets to have in their portfolio per se. And like there's confidence with whoever's making that decision, which is, over the past 2 years, I don't think, there's definitely been mistakes made with rarity of cards, prices they've IPO'd at, whatever the case may be. So I think, for an overall growth in that space and more adoption, I think that would have to be definitely addressed.
Yeah, I think like yeah, like picking the right cards is gonna be really important. I think that like as like one of these companies, you don't really have a lot of room to like make mistakes because you don't really IPO cards like super often. I don't know what the exact frequency is, but I'd imagine like it's not like they IPO like new cards like every day, right? So you can only mess up a certain number of times and pick the wrong card before people start uh, being more wary of your offerings. Um, so yeah, I definitely agree. One other thing that you mentioned earlier that I thought was really interesting was what happens when like a card doesn't fill. Um, from I'm not super knowledgeable about that fractionalization space, so I could be completely butchering it. But last time I talked with my friend, he uh, had bought a piece of a 1997 Kobe PMG red. I think he put like 20 grand in it, but it didn't fill. Like the price was, not too high for investors. He told me about how his money was like stuck there for like 3 weeks, and he didn't hear back from those companies. It was just kind of stuck in limbo. Company obviously is not incentivized to return the money because they want to fill it up. But if they fill it up, then but it was like kind of, but they also can't reduce the share price because then like what happens to other people who like
Right.
initially bought in, right? So you're kind of like stuck in this like really tricky scenario where your money is like stuck in limbo, right? It's kind of like a reverse loan on the topic of loans, right? You're kind of like lending the fractionalization company money. So that gets really, really tricky. And in an up market, that's fine, right? The card is going to fill, like no problem, right? People are like more optimistic. But in a down market, like what happens when people can't fill, right? Their money is tied in, they have a bad user experience, company is stuck with the cards. Yeah.
It's just another.
Unless
Yeah.
unless the company personally invest like some of their funds in the card, right? In which case, like they're not only like a financial company that splits the cards, but they're also performing in terms of like an investment fund, right? So say like 70% of the Kobe PMG red fills, they're responsible for the remaining 30. And then
That puts them definitely
they would take
have
your
to be
profit and loss.
extra sure on the price that they're IPOing it at, if that's the case.
Exactly.
I
Yeah.
know certain companies like
You
Collectible,
you put your money where your mouth is, right?
exactly. Well, certain companies like Collectible, they basically just auction it off essentially to fill. They don't actually buy the card like at least I don't know about all, but I know from a good source like multiple that they're not buying these cards. They kind of just I guess they take a fee or some sort of thing like that, and
Yeah.
auction them off to fill. So that's definitely a different business model completely. Um,
Yeah. It's lower risk.
for sure. Any other topics you would want to speak about or have thought of in the regard to the financialization of cards or the future?
I think generally we're seeing a trend towards vaulting. All these companies, Alt, PWCC, PSA/collectors, and Golden, right? Everyone wants to vault a card. I don't know if like you've kind of noticed that,
Have
but there's this general trend of like these companies wanting to take the cards out of the hands of collectors and storing them in the vault where they can charge fees on the storage, charge fees on shipping, charge fees on auctions, right? So I just think that is really, really interesting. It's almost as if like you're storing money in a bank vault, right? Like they want to manage your assets.
yeah. If you think
I
about
think that's the trend where the companies are going.
that, how I kind of almost see that play out is that less and less it'd be less and less like big cards actually and like deals actually done at shows, and it'd be even more so just like almost more so like NFT like where it's all like literally online digital transacting these pieces from your vault to someone else's vault, just wherever they're located. So it really makes you wonder how that transforms like the landscape of shows, because if that's the direction we're headed in, I know a lot of dealers, they come to shows, they don't have a fraction of the high end cards they have because they're all tucked away somewhere. They just don't even bother to bring them out. So I don't know. I think that's interesting for sure. It's a good point.
Yeah. I think my experience has like been kind of the opposite. I feel like my high-end collector friends, they don't really store cards in vaults because they want to have the cards, like they buy them because they're true collectors, right? They want the cards in front of them so they can like see them every day. If they're flippers, they want the cards to they want to bring the cards to shows to get maximum exposure. So I feel like like even though these companies want to shift towards vaulting, I feel like there's kind of like this tug from like the collectors to keep the cards within their own hands. So then you see all these like companies like trying to incentivize people to ship cards to them, using like fee-less structures, through like certain discounts, promotions, stuff of that nature.
For sure. Um, with this down market, you could say, what I foresee is like there definitely being I think it's the market's been very flipper heavy over the course of the past 2 years really. People just you're kind of battling out to who can get in the lowest entry, sell for the highest point, whatever the case may be, and especially more so now and through this down market. Do you foresee? And I feel like a lot of people are making their full time living off of cards, which is obviously great. But if everyone's doing that, I feel like that is almost unsustainable to a certain extent. How do you see? Do you see there being a reshuffling of like true? I don't want to say true collectors because everyone flips and sells, but like collectors to flippers and that percentage reshuffling throughout this down market, really.
I think so. I think the it's going to turn more towards the collectors, as prices of things that were previously unaffordable are now affordable. I think collectors will eventually gain power over the flippers. I think flippers will also um, probably be like less active because they see prices dropping, right? Like if every comp is lower, every card you buy becomes a hot potato, right? And then to move it very quickly before the next comp comes out. But if everyone thinks that way, then that's just an only create a downward spiral. So I think I personally know a lot of flippers who have just like kept their hands out of the game for the past few months, and plan on returning later when the market is at least more stable.
For sure. And this is a little
Because it used to, so I used to, I've flipped cards for like the past few years. Like that was my full time living before I started working on Veriswap. And what I've noticed, a shift I've noticed in like the past 6 months, is that previously you would have been able to like judge a card based on fundamentals. So like what I mean by that is like you'd be able to say like, oh, a Tom Brady auto is you'd be able to sell cards above comps. And people would recognize that like certain comps are steals, other comps are like not steals. Right. So like if a card did like 21K, but you had a convincing story that it was worth like 25K, you could easily convince someone of that. In the past 6 months, I think that has changed. I think that because the market has gone down, people have started saying something else. They're like, okay, like the market goes down, your card is worth 80% of the last comp, right?
that's the new comp now. Yep. Instead of it's a steal.
People rely on comps a lot more. There's like less like hand wavy stuff like, oh, like this Brady auto is worth Brady autos are typically worth like 25K, so this Brady auto is worth 25K, right? Like people are a lot more strict and conservative with their estimates.
I would definitely agree 100%. This is the last question before we'll talk a little about Veriswap, but this is off the grid. What is your strategy or your plan throughout this down market to whether it be to flip or whether it be acquire assets? Like, how do you look at this down market to apply to yourself?
That's a good question. I think it's a good transition point too. Um, as of April, I decided to work full time on Veriswap. Veriswap is an online platform and middleman service to facilitate trades and partial cash trades between people across the world. So, I'm one of those flippers that was basically like, okay, I'm going to wait for the market to sell down a little bit, and I want to work on a project in industry that I love, in an area that I'm not too familiar with, right? Which is like, website development, app development. So I thought for me, like it was the next step that I want to take in my career. It has a combination of like something that I absolutely love doing versus like something I had no idea initially of what I knew how to do. In terms of like getting PC cards, I think that's been great so far. I have been buying a few like PC cards at like really low prices, and like sometimes you go on these auctions and you're like, okay, like even though the market is down, like these are cards that I would buy at the prices that they do end at.
For sure. Interesting. I mean, it's the buyer's market right now for sure. So I would definitely
It is a buyer's market, and then you also see like, I think what's also not talked about enough is like cards that were previously almost never sold are coming out of the woodwork. Like look at the number of like 03 LeBron Topps Chrome Gold refractors that have sold in the past few months. right? I think there's probably like 5 or 6 that have sold. Within the past 3 years, like I hadn't seen a single one sell. I'd never even seen one in person. Um, Whereas at the 22 national, like some guy literally walked up to my table with like LeBron Gold Refractor BGS 9 and was like, "Oh, you want to buy it?" Right. So it's cool to see like these cards coming out of the woodwork. It's definitely a collector's market because now have this choice that you previously didn't have.
Yeah, that's very cool. And I guess we'll tie into a little bit of Veriswap. So like, what I could probably take a guess, but like, what was your inspiration for really starting this company?
What's your guess?
My guess is probably what most people's guess is that it was very difficult and very unsecure to make high dollar trades across the country or wherever through the mail. And then you almost want a with people you don't know whatsoever. So you probably want that middleman service to facilitate that and provide security on both ends.
Yep.
Something
Your guess is correct. You're 1 for 1. Yeah, I would say that's the main aspect. The second aspect was that I think trading was like a super manual process. I mean, like previously, I would post cards on my Instagram story. I would have an assistant respond to messages for me, negotiate for me, track every single card that got shipped out. I would give him a commission for like everything he sold, everything he traded away, right? And then we had this like system to like respond to Instagram messages and Facebook messages. But the system is not built for card trading, right? It's built for general social media. Um, so I wanted to make a platform where that was specifically crafted for card traders that could have all the features of like doing transactions on the platform without having to do the whole like manual negotiation process that people do on Instagram. One thing that also personally disliked about trading on Instagram was that there was a lot of fluff that was part of the trading process that I feel like was unnecessary, especially the higher end you go. There's like a lot more like I guess like what's a good way to put it, like BS, right? Like you'll see people, they'll be like, oh, how's your family doing? How's the weather? How was vacation? And then they'll be like, oh, by the way, I'll make an offer on the Clear Jordan PSA 9, right? Like I've always been like a fan of the more like cut to the chase approach, where discussions are more scientific and purely transactional, which is why I made Veriswap, because you can literally like drag and drop cards and make offers. And based on the traction so far, it seems like other people appreciate that as well.
Yeah, for sure. From what I've seen, it is awesome. I've yet to do a deal with that, do a deal on the platform yet, but hopefully soon to change. I mean, what do you see like the evolution of this being? Because I feel like you could go a lot of different ways with it.
It's a good question. We want to reimagine the way that people trade cards through the mail. Like you said earlier, I going to card shows is a very tedious process. As much as I love cards, I hate going to card shows, and I think that just say a lot, right? Like I almost like every time I go to a card show, I almost have this like dread of like flying there, checking the hotel, taking Uber, all of that. I personally hate doing that, and I feel like a lot of people they feel the same way. So we want to make we want to bring the trading at shows / trading experience to something that people can do 24 hours a day, 7 days a week, when on their phone when their boss is not looking at work, right? They can just negotiate trade deals rather than have it only be like a weekend occurrence a couple times a year.
For sure. I mean, that's definitely a very useful thing for a lot of people. I mean, uh, yeah, I mean, I've experienced the same thing what you're saying with through Instagram, this and that. It's very difficult to one stay on top of everything. You have to keep manually, like, really how it will be like people will send a couple cards in the chat. You have to look up all the prices. You have to see if you know, they're right or not. They're way over. There's a lot of headaches and hassles that come through doing trades on Instagram. I will say that, and I don't like doing them. So I think anything that eliminates one of that problems, because really see that's how you grow a good company is you're solving a problem, and which is why I like the idea of Veriswap a lot because that's essentially what you're doing. You're solving a very very poignant problem in the hobby. So I definitely commend you for that. I think that's awesome. Any final thoughts in general that you'd want to speak on or whatever?
Any final thoughts in general? Yeah, just plug out there, Josiah. I know you haven't done a trade on Veriswap before. First trade is $1 for everyone listening to this. We cover 100% insurance, so that if something goes wrong, either during the shipping process or through the verification process, we will cover that to make sure that the cards get to you safely. And if any of you guys have any questions about Veriswap or need anything at all, feel free to reach out to me on Facebook. My name is Raymond Lee, Raymond LI, or on Instagram at and then Itsraymondli. It's all one word.
Awesome. Yeah, we'll definitely put your links in the description as well. So make sure to get you guys connected with that and Veriswap as well. I'll definitely be joining soon. I promise. You got me
Take
in.
you on that promise. Yeah. Thanks for having me today.
Oh, absolutely. Thank you for coming on. And I definitely had an interesting conversation. Awesome to pick your brain and have a little discourse. And I hope everyone listening hopefully gave you something to think about at least. So, yeah, hope you guys all have a great day and we'll see you soon.